Everyone, welcome back to The Dive. Joining us today is Curt Marvis from QYOU Media. But before we bring Curt on, just a quick reminder to tap on that subscribe button so you don't miss out on our future content. Hey Curt, welcome back to The Dive.
Hi, Cassie. How are you?
I'm doing well, thank you. How about yourself?
I'm good. Still enjoying the last bit of summer.
Me too. Sad days. All right, so let's begin here. So we have to ask, India has always maintained a good connection with the Afghan Civilian Administration. Now that Taliban fighters have taken control of Afghanistan's capital, the threat to neighboring countries has increased. What impact do you think this will have on companies like QYOU Media?
I don't really, to be honest, obviously this has been a huge part of the news in the US. And I think clearly a lot of criticism, not to get into the politics of it, but clearly a lot of criticism of what happened with the government here in the US, and I think around the world. With that said, we don't anticipate any impact really. I don't think Afghanistan's really interested in India, to be honest. So we don't really foresee that having any impact on our business.
Okay, good. All right, so here congratulations are in order. The Reserve Bank of India recently approved the 2 million initial investment from the Times of India Group. Where do you intend to use the net proceeds, and how will it help the company grow?
Well, it's interesting. I think our shareholders, present and future, haven't really quite caught on to the magnitude of the impact of closing that deal. We actually announced it back in March, and it required the approval of what's called RBI, the Reserve Bank of India, which is the national bank that deals with all currency investment and everything around banking in India. Partially because of COVID in the April, May, June timeframe in India, and partially just because it's a bureaucratic organization, and so everything takes longer than it should. It took us until just last week to get final RBI approval and sign off on that deal. Why is that so important to us? Times of India is among the largest media companies in the world, and it is by far the largest media company in India. They own all the major newspapers in India, about 100 plus radio stations, dozens of television channels, mostly news channels, outdoor billboards, bus stop stuff, digital companies, including MX Player, who we're in business with, which is one of the largest digital providers in India. And so to get a strategic investment from the largest media company in all of India that's been there for 187 years is a huge endorsement of the growth of our business there. Their investment arm is called Brand Capital. Well, the reason it's called Brand Capital is because their whole sort of mandate is to leverage their media presence there to be able to build your brand. So this is everything that's happened for us, and our growth in India has happened with virtually no marketing. And so this is going to be a big shot in the arm and a big boost to us in terms of, our ultimate goals that we're looking to achieve there.
Yeah, that's awesome. Okay, so the company also announced the launch of BaratBox. What can you tell us about the platform, and how will it be used to reach different market segments?
Yeah, it's actually, and I wouldn't expect you to know this, it's actually pronounced Bharat.
Oh,
Bharat literally means India in Hindi. But what it really means, what the real meaning of it is it's kind of like it's the heartland, it's the homeland, it's the kind of the center part of the country. And so Bharat has become synonymous with what's known as Tier 2 and Tier 3 India, which means smaller cities in India terms, which is a couple of million or less. So that's a small city in India. It also really means the rural part of India. Well, we've seen a lot of success there. We've made that a major part of our focus. And, a lot of these companies that are investing billions and billions of dollars into India right now, Google, Facebook, Amazon, Walmart, their target, their real focus, it's not that the metro areas and the big cities aren't important. Clearly they're important, but the real growth that's happening of an emerging middle class, of an emerging group of literally hundreds and hundreds of millions of people that have spending power is happening in Bharat, in tier 2, in tier 3, in rural. And so we've always had that as being something that's very important to us. And so BaratBox is combining now what we have with our television power there, with the power that we've got of Chatterbox, our influencer marketing company, and combining those efforts to offer brands greater 360-degree access across the whole area from television through influencer. So that's what BaratBox is really, it really in a way is announcing that Chatterbox and QYOU India ad sales group are fully integrated and engaged to bring in new business.
Yeah, that's amazing. Okay, so you've also included D2H. What role does this play in achieving your youth-oriented brand in India?
Well, actually, D2H fits into this a bit as well. India is made up in the television space of two kind of distinct categories, like it is in many places. One is the satellite providers, who are, beaming the signal down to a dish that you've got in your house or apartment or what have you. And then there's the cable providers that have literally a cable connection going in. D2H is a satellite provider. Satellite providers, not 100%, but tend to have a little bit more penetration into tier 2, tier 3, and rural India because of the fact that some of these places aren't yet all built out with cable that's going into the homes and the locations there. So D2H is an important addition. They have about 10 million customers, 10 or 11 million customers across India, and they have a slightly higher penetration percentage-wise in Bharat, tier 2, tier 3, and rural India. So it's an important addition to everything that we're doing to push into that super high growth segment in the country.
Yeah, makes sense. And QYOU's branding has been increasing in India over the last few months. What is it about the market that appeals to you? Do you have any plans to expand your branding and ad sales to other countries?
We're really, we probably made a mistake early on in the company's sort of history of expanding too far, and that really hurt us. We didn't have the wherewithal to really make that work. We're now India's almost 1.4 billion people. Our target audience is a young audience. 50% of India's population is 25 years of age or under. 65% is 35 years of age or under. So you're talking about a market of 600 million people, 25 years of age or younger in India. That's twice the size of the entire United States of America. So it's a massive market. And when I talk about Bharat and you talk about tier 2 and tier 3, you've got this enormous and emerging market that's happening of young people who are growing up with cell phones, with digital, knowing digital creators on Facebook, on Instagram, on these platforms. I mean, India, people have to realize the largest size audience for Facebook of any place in the world is India. The second largest place for any category for Instagram in the world is India, and it's about to become the largest country in the world for Instagram. YouTube, 10% of all YouTube viewership in the world happens out of India. Okay, that's crazy.
Yeah,
So that's why we're there. That's why we're there, and it's such a, and that's because of this young population there, and the young population is getting more educated. They are becoming more and more middle-class consumers. And so that's what we're leveraging. So the answer to your question is no, we're focused completely on India now and winning there and winning big.
Okay, so let's talk about the creator economy. For those viewers and those who are new to the market, can you share what the creator economy is and where do you see this going over the next few years?
Yeah, the creator economy is kind of a new word. It's also connected a bit into another new kind of phrase, which is social commerce. Those two fit together, and we live in the middle of all of that. The creator economy is really talking about what we now call influencers. I mean, I would argue you're an influencer. You're a person who's online speaking about finance things. You're Steve and the Deep Dive is an influencer platform where they're influencing financial people to evaluate and make decisions about what they might want to do in financial markets. And you have those in every category possible. You have those for makeup and fashion. You have those for, sports and sports betting. You have those for food and cooking. I mean, any category you can imagine, you now have influencers. What's important is those influencers are directly selling products and services to their followers and their audiences. That's the world of what's known as social commerce. Social commerce has really grown in China over the last 5 years. It didn't really exist 5 years ago. It's now a $300 billion industry in China. Okay, 300 billion of goods and services that are being sold through direct channels. If you look at tier 2, tier 3 India and Bharat India, you'll see that it lines up almost exactly for what's happened in China in terms of the audience. That's why we're targeting that area. And that's where the creator economy, the reason we purchased Chatterbox isn't just about their influencer marketing business. It's about they have data on 300,000 influencers in India. So when you start to combine what I call the loudspeaker, the power of our television capability where we reach 100 million people every week, and you combine that with our direct access to influencers, and you look at where social commerce is going around this creator economy, that's why we firmly believe that we still remain extremely undervalued as a business, and people will see how that's going to turn into real growth.
Mm-hmm. Okay, so lastly, what should investors be looking out for with QYOU for the remainder of the year?
Well, I think there's no silver bullet in our business. I've always said that. There's no one thing that's going to drive our business. People should watch for more distribution deals and more reach to get to customers, both across traditional television, across OTT platforms, and across mobile platforms, and connected TV platforms and app-based platforms. We want to be a ubiquitous brand. We want to be everywhere, just like Coca-Cola is. Wherever you are and you turn, you see the Q there. The other thing they should watch for is watch our numbers, watch our revenue increase. We've put out some guidance for this year. We already came out and increased that guidance significantly from what we provided only 3 months ago from the quarter that's already over. We're in the middle now of the quarter that we projected some guidance on. Let's see what happens there, but I'm very optimistic that things are going to be equal or better than what we've predicted. And so I think people will see that we're going to start to deliver numbers, and ultimately that's going to turn into profitability. So I think, we're firing on all cylinders right now. I think our stock has softened a little bit, and that people, I don't know, just aren't recognizing and realizing what's happening. Steve himself said he thinks the stock is a hell of a lot better buy at 30 cents than it was at 5 cents. And I wholeheartedly agree. We have a real business now, a real platform for growth. And so investors should just watch us grow and come along for the ride.
Yeah, for sure. Well, I can't wait to see what QYOU Media does next. Thank you so much for joining us today.
I really appreciate you guys having me on the show.
Yeah, anytime, Curt.
Okay, thanks, Cassie.
Thanks so much for tuning in. We'll be back again tomorrow, but in the meantime, you could check out that video and throw us a like.